People almost forget about the value of their own currency, especially in a country that's as big as the US.
Now, if we look at the 1960s to where we are today, we see a cumulative inflation on the US dollar of about 955%.
Welcome to the Swiss Money Secrets podcast, a podcast designed to cover all things offshore investing and banking from the Swiss perspective.
Let's get into it. Today's topic being on the long-term performance of the US dollar. Because we are based in Switzerland, we will be making some comparisons to the Swiss franc. Before we jump into that, we want to update our listeners on when we are actually going to be stateside in the coming month or two. So if you're listening and interested in meeting us in one of the cities that we might be in, please send us an email and we'll be happy to set up a meeting with you. So, Urs, maybe you can start. You're going to be in the States first. Before I am, maybe you can start where you're going to be and what dates.
Yes, I'm going to fly to San Francisco on June 6th and will stay there for about 5 nights. Then I will drive down to Los Angeles and San Diego until June 19th.
Perfect. So if you're interested, you're living in that area with Urs, make sure you reach out to him. For me, I'll be flying into Denver, Colorado on the 19th of June, and I will be available for meetings on the 20th, which is a Thursday, the 21st, which is a Friday, and then the 24th, which is a Monday. So if you're interested in getting in contact with either of us, as I've said many times, find us at our email. There'll be a link in the description where you can shoot us an email if you're interested. So with that, let's move on to the long-term performance of the US dollar. I think we'll get started with kind of some of the history behind the US dollar, what's made it to where it is today, how it's done in terms of purchasing power, what the inflation has looked like. So it's interesting to see where the US dollar started. Obviously, it was highly volatile back in the 1800s of price, just a newfound nation trying to figure out what trade was like in a totally different world in terms of who was in charge, who were the ruling countries. And so there's quite some volatility in the US dollar and its purchasing power, some periods where it was gaining, some periods where it was losing, up until about really the Second World War. And that's where we really start to see the US dollar really start to tank in terms of its price. Now, there was a shift in obviously in the world powers during that time due to the changing of world wars and the changing of borders in a massive way, especially in Europe. And what we saw was the US dollar, really start to be a lot of the influx into Europe, being a lot of investing going on in Europe and especially the western part of Europe, a lot of trade happening, the US becoming this more globalized presence. Beforehand, the United States was very much so an isolation state. They only really cared about what was going on there. So they had international trade, but the US territory was so broad and massive that they kind of carried on inside of their own borders, trying to develop the nation and create a robust economy for its people internally. What's quite interesting to see is kind of how the US government really before the 1960s viewed the US dollar and their monetary policy was very much concerned about the strength of the US dollar. And then we saw in the 1960s that kind of shift and less to be about the strength and more about what is the income of the population. That was a big movement that happened in the US. Since the 1960s, we've seen a drastic decline. I mean, we've already seen that for many years ahead of that, but that's where we see a huge drop in the value of the US dollar, of how much in terms of purchasing power really came about. As it became this world currency, we had the Bretton Woods kind of structure that set up where a lot of countries went off the gold standard and pinned it to the US dollar. That lasted for a few years, a while, but then eventually fell apart and we saw floating currencies that we see today. But the US dollar, through strategic agreements with other countries, was essentially the reserve currency where commodities, especially oil, was traded around the world and has been so up until kind of the near future as things are really starting to change. So that's kind of where we saw the history of the US positioned and how the US dollar kind of came to be the world reserve currency and all of its strength as you know, in 1989 when the Berlin Wall came down and there was an opening of Europe, there was this really big push to make sure that the US dollar would still hold prominence in an even more fractured world in terms of the powers and currencies that were going to be. And that's when we saw like the likes of Henry Kissinger going to the Middle East and ensuring that the US dollar was going to be the trading currency with especially the oil producers. And so that was kind of this dominance of the US dollar for so long. Now, if we look at the 1960s to where we are today, we see a cumulative inflation on the US dollar of about 955%, this incredible number. And if we look at the Swiss franc in that same time period, we see about 340% inflation. So still quite a lot of inflation, but almost 3 times less. So that's kind of the history behind it. Maybe we can talk about what gives the strength today. Or if you guys have any thoughts on the history or things that you think are important that we should share.
Yeah, I think especially with the Second World War, as you said, before the for World War II, the US was pretty much active or like busy with itself, and after that they started to realize that they can become a world power, that there are countries that can help can need their help also with rebuilding Germany and the countries around. And so there has been a lot of investment going on, which has also caused the US a lot to become this primary power globally and to keep it this way.
Yeah, certainly. Damien, do you have anything that you think was quite interesting in looking at kind of the history of the US dollar?
Yeah, I think I don't really have a lot to add to the history. I think your inputs have been very thorough and interesting. What I always find fascinating is how people almost forget about the value of their own currency, especially in a country that's as big as the US. I think in Switzerland, for better or worse, we are much more exposed to other countries because they're just a few car hours away. But if you're in the US and you don't travel very frequently, you might not even think about the value of your currency in the long or short term. So for me, it's always very fascinating to have those kinds of conversations and do the research and actually look at the impact that your own currency can have on your, like, either the building of wealth or also the preservation of wealth.
Yeah, and I think just recently that has changed a little bit in the US since the Mexican peso strengthened against the US dollar. There is much more awareness from Americans that there are currencies that appreciate against the US dollar. Before that, it was like South America was pretty much like this area where the currencies devalued against the US dollar, and now they have a country just next to them where it becomes more and more expensive for Americans to spend their vacation, to buy condos, whatever they do there.
Yeah, and I think the something often when it comes to investing is, they see that, potentially as like, oh, my US dollar will go long, I get a cheaper vacation, and now it's more expensive. But had they, let's just say, hold account in Mexican peso for the long term, they would have had all of that appreciation had they ever decided to go back to the US dollar, where they had actually gained the US dollar based off of the appreciation against the currency. So it's not just the inflationary environment that certainly has a potential impact on your wealth, but the missed opportunity of being diversified, of holding your assets in other currencies that have that potential to move upwards. And so that's something that obviously, we talk about tons here. That's our whole goal, is to help clients diversify internationally, to attract or really gain that value that's unfortunately in the long term really playing against the US dollar.
Yeah, I think it also makes sense. You now gave a very long-term history of the US dollar, but also maybe we want to zoom in a bit on like the past 20 or 30 years, which is more or less the time frame that our clients had to build their wealth, and also from our side, that's like the time frame that our company has been in business. And I think there has been quite a lot of change and movement in things relating to the US dollar value just the past 2 or 3 decades. Especially one thing that comes up very frequently is just the levels of debt that the US has. So that's something that we saw increasing in the mid to late 90s. and it hasn't. I mean, it has only accelerated, and it severely accelerated during the financial crisis. It severely accelerated during the pandemic. And correct me if I'm wrong, but I think for both Democrats and Republican presidents, we saw an increase in debt, and that's something that certainly leads to a situation where the government or the whoever is the administration is at the time being doesn't really have an interest in regaining the strength of the US dollar. And I think another topic that we can talk a bit more about, and I think you probably both of you have something to share about that as well, is just how other countries and other like power blocks are seeing this weakening in the US dollar, and how they are like spying or looking at this opportunity that they can build something, some sort of alliance or some sort of currency that could challenge the US dollar as a reserve currency at some point in the future.
Yeah, I think the only time that the US actually kind of stabilized their budget was during the Clinton administration. There was quite some fiscal responsibility, seemed like to be, but yeah, I mean, it's essentially since JFK, it's been just this deficit spending to move up. I mean, I can remember when I was 16 years old, and there was this campaign trail going, and everyone was talking about how the debt was out of control at $16 trillion, and now we're double that easily in less than 15 years, so not even double the time.
Yeah.
And so it is something that is bipartisan in lifting our debt ceiling, certainly, and it is scary. I mean, in terms of looking at the alliances, maybe you can share a bit more on kind of how the BRICS have been moving, or some of the BRICS nations. It's a buzzword. There's a lot of things, and there's talk about a different currency that they would use. We don't see that, but we do see other movements going around.
Yeah, I mean, in general, the world is developing, and there are more countries that have reached a stage where there is a certain level of wealth present, and with this certain level of prosperity, there are also more demand for having a say in the world order. And for the US, especially with what was going on during the Second World War II, I mean, America was the saver back then, and they thought, okay, we will have this status forever. But as long as it went on, there were other countries saying, okay, we want to have a decision in everything that is going on. And as long as the US was involved as heavily and also had their laws forced onto other jurisdictions through the US dollar, they started to realize that's not going to happen that easily. So there is a demand and a wish from these countries, from these other countries in the world, to detach and to diversify away from the US dollar. And we see this. I mean, the US dollar is still the most important and the most traded currency in the world, but its share of the overall currency allocation is decreasing over time.
Yeah, I mean, and we see it in countries like India starting to trade other commodities outside of oil in their own currency. Same with Brazil. I think Brazil and South Africa, or Brazil and India, I can't remember which one exactly, but set up a trade agreement to go back and forth with each other on certain commodity trading in their own currencies. And I think the piece is, not only just having a say in what happens in the world order, but also having a say in some, I guess, less mechanisms of control from the outside, that they get to do what they want to as a country.
Yeah.
I mean, at the end, whether you agree with their stance or not, countries want a certain amount of autonomy, and the more US dollars they have, the more power that can be flexed, whether it's US dollar, whether it's Chinese yen, whatever it is, whatever country has those mechanisms of control, you want to minimize that, and that is, starts a lot by the currency that you're trading with. And so where I agree with you, the US dollar, I mean, there's literally no denying it. It's still this major reserve currency. We're starting to see these trends and the slow trickle away from US dollar being the reserve currency. Even Janet Yellen, said that there's going to be this slower decrease in the US dollar being held as a reserve in these other countries.
Yeah, and we also have seen that during the last 2-3 years, how the share of gold held by central banks has increased rapidly, and it's still increasing, even so the price of gold has increased also by quite a bit. And so even so it has become kind of an expensive commodity, there is the demand to diversify away from the US dollar.
Yeah, certainly. I mean, go ahead, Jamie.
No, I just wanted to say that like the whole topic of diversification, we're not talking about this from a country perspective, but it's also a nice segue to talk about what individual people can do in terms of like the US dollar devaluation. And I think it's important to note that if you live in the US and you earn and spend and think in US dollars, that even though the US dollar is losing value in the long term, I wouldn't say it makes sense to divest from it entirely, but there as well, a strategy of diversification can make a lot of sense, be it through precious metals or foreign currencies or a foreign bank account, just to be taking into consideration that maybe for your long-term capital preservation, your savings, your investments, you might not want that entirely exposed to the US dollar.
Yeah, absolutely. I think that's, as we touched on earlier with like the Mexican peso as an example, where we've seen in the past 3 to 4 years this incredible strengthening. Will it hold? We'll see. That's something obviously we monitor quite closely. But if we look at the Swiss franc to the US dollar in terms of appreciation, again, kind of taking that 1960s to 2024. I mean, in 1960, with $1 US dollar, you could get almost 5 Swiss francs. It's like 4.9 Swiss francs. Today, you can't even get 1 Swiss franc with $1 US dollar. So you have all of that appreciation there where these currencies appreciate. In the Swiss franc, it's obviously been a long-term sustainable appreciation, as opposed to where there might be a volatile where one currency always all of a sudden gets serious interest and you have to see the long-term effects. You see the Swiss franc doing that in the long term and doing a good job at it. And part of that is how Switzerland, I mean, we've talked about it here, controls their debt, especially in the last 2 decades. It's been incredible to see with their debt break, how they've managed that and how they've also run surplus most of the time. Of course, there's years where they're in deficit as a country, but in general, there's a reason that the Swiss franc has appreciated. It's not just because, people want to have Swiss francs because it's outside of the US and it's the place where you can hide your money. That's not the case. It's the management of the economy. It's the management of the price stability that the US has essentially thrown to the wind to a certain extent, where other countries like Switzerland have had to really play and make sure that their economy remains stable for the long term.
Yeah, and we also saw that in the past 2-3 years with inflation, right? I mean, that was a very nice side-to-side comparison, where in most Western countries, we had quite significant inflation, especially in the US. I mean, we don't have to remind our listeners as to how high inflation was. And while Switzerland also had heightened inflation, I believe our peak was at 3.3%, and we have been back into this below 2% bandwidth very quickly. So I think really it doesn't matter what time horizon we take, if it's like 100 years or if it's 20 years or if it's just 2 years, every single time horizon we see that the US dollar has depreciated and hasn't fared as well as other currencies.
Certainly.
Yeah, and on top of that, every now and then we hear from clients or prospects that when we talk to them about the strength of the Swiss franc, they say, yeah, that's not fair because the Swiss National Bank is manipulating the Swiss franc and intervening the market, and this goes into the same direction. That is totally true, but they intervening the market so that the Swiss franc doesn't become even stronger.
Yeah.
And so if the Swiss National Bank just would hold back, I mean, it would be the Swiss franc would be so expensive that it wouldn't make any sense. It would harm the economy. And so there is intervention going on, and I think that is important. It was also an instrument they could use to manage inflation. And from a US perspective, especially, the US is a consumption-oriented economy, so they import a lot of stuff. And when the US dollar devalues, that means that whatever they import becomes more expensive, so it drives inflation even further.
Yeah, I think that's a very, very good point. I mean, there's a couple countries that you can look at. I mean, one of the big things that they went after the Swiss franc for was, this whole negative interest rates. Well, it was the Swiss franc saying, hey, it needs to cost you money to hold this, because otherwise we could be in serious trouble. I mean, we're talking about the currency, but at the end, it's the economy that's in it. And if Swiss companies are doing business internationally with an economy like Switzerland, you have to make sure that your currency isn't too strong. I think that's also, something the US does as well. The US is a hilarious example to use by saying they're currency manipulators. Well, yes, let's apply the same metrics to the United States and see if they would hit those same metrics. I mean, there's also, that's the other side that's often not talked about, is there isn't a lot of incentive for the US dollar to get so much stronger.
Yeah.
Because in international trade, they're the reserve currency, and these other countries that whether they have stronger currency or weaker currency than the US, they don't want the US dollar to become more expensive. And the US dollar understands that the players in their business also don't want it to be too expensive, or they'll go to producers or companies or service providers that are closer that can do it cheaper because of the strength of the US dollar. And often when we see the US dollar, headlines this year have all been about the US dollar's gaining strength, it's gaining strength, but we're talking about a few months. We've seen it in the past where the US dollar gains strength until September, October, and then loses all of it, and then loses further strength by the end of the year.
Yeah.
And so, it's always, as you're talking about time horizon, we have to look at that as well, and what is the exchange over time. So what are our future thoughts when we look at, where we see things going with the Swiss franc and also the US dollar? Do we have thoughts about where we think it is heading? We've talked about a little bit about the US and these other countries going back and forth. What are your guys' perceptions or viewpoints on that?
I certainly don't feel comfortable making projections on where
Sure.
the US dollar Swiss franc pair stands at the end of the year or whatever. But if we look at the future, I think in the medium to long term, I don't see any other way than downwards when it comes to the value of the US dollar. I don't see any indication that the US dollar is going to gain value in the long term. And I can only reiterate that I think it makes sense that if you're a US based person that has a certain amount of wealth, to think about how you can protect yourself against this devaluation of your home currency.
I can't add that much. The only thing I can say, we talked about the last 2 decades. If you would have moved US dollar into Swiss franc 20 years ago and would just kept the Swiss francs, you would have the same amount of US dollar today. So it is, or the same purchasing power today. And so locking in a current rate today and invest in this currency makes totally sense looking forward, looking for the next generation, for the next couple of decades.
Yeah, especially when I look at the trends, I see, just to give the side-by-side comparison to a certain extent, okay, different economies, different sizes, but Switzerland to the US, the key things I'm looking at is, okay, how does the government and their central bank manage debt and price stability? If we look in Switzerland, price stability is the only focus of the SNB. Again, we're beating this horse continually because it's something that actually makes a big difference, where in the US, the Fed is looking at price stability and unemployment, which is, for me, is a tough thing for a central bank to look at unemployment. Okay, it gives them maybe a metric to say, okay, what can we do here or there? But for them to focus on unemployment doesn't seem so helpful for any of what they're doing, really. Then we look at the government policies. In Switzerland, the public got together 20 years ago and said, we don't want increased levels of debt, so we're going to put a debt break in percentage of our GDP, so you can have higher than, I think it's 43%-ish, 44%, something like that.
Yeah, they take into consideration the economic situation. But
of course.
Yeah.
But essentially they put this debt break in so they can't grow the debt level insane amounts based off of the economy. So that really puts some curbs and ensures effective, efficient, allocation of what the government is spending on. The US, on the other hand, has a debt ceiling, which a vote of Congress can just move it up another trillion or so. And this has happened over and over again. It's sadly seems to be a political bargaining chip for whatever party is in power, has the majority of the votes, and how they're going to increase it and what they're going to spend it on. But there's not been a time that they just say, nope, we're fixed, we're in solidarity, we are going to pay back our debt. And so then when I look at that, I see, okay, how do you get rid of that debt? Well, you need higher inflation so that you can actually pay back on your interest, where 25% of the US budget is just to pay the interest payments. And so I don't see the debt going down. So that means high liquidity in the markets, continue to pump out US dollars. I don't see the US dollar gaining in value, where in the short term, okay, maybe it might get some strength, based off short-term market expectations. But in the long term, again, like we've said here, I see inflation continuing to be a problem. I mean, Switzerland, if you look at the inflation rate since the debt break, has been quite low. I mean, below 2% on average per year. If you look at if between the 60s and now, okay, it was 2.34%, something about there. So, okay, a bit higher than 2%, but the US was 3.75% for that time. And that percentage over that time period really adds up. And the Switzerland has a much better mechanism of control in handling that inflation, where the US, if it spikes really out of control, and then you're seeing that inflation really tripling, quadrupling, really hitting the purchasing power of your currency. So with you guys, I think I agree. I think the US dollar is something that is in for a really tough long haul, and it's going to hurt to get it back into control, and I don't think anyone's really willing to do that. And in Switzerland, they have everything set up to make sure that things will be sustainable for the future.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.